All right. Hey, everybody. Welcome to Elliott Wave Made Simple. Today, we are going to look at silver again. And with the number one goal in mind when trading silver is don't get killed. And the best way not to get killed trading silver is to understand what the parameters are, knowing where you're wrong, knowing where you're right, knowing where the risk truly is. Elliott Wave is fantastic at developing levels to give you context in the market and having solid parameters that you can trade against, because it's really not about making predictions. To me, it's not as much about making predictions as it is making good parameters, because you can always define your risk if you know where the parameters are, and you can decide for yourself how much you want to risk. Uh, so enough talking. Let's dive into the silver chart. All right, now for some more talking, let's look at silver. This is a continuation of my previous video on silver, where we were talking about parameters. And I'm going to link the previous video about silver. I'm going to link it to the end of this video. So you can kind of, if you're still learning about Elliott Wave, I think this is really going to help you to see how the price wave is developing against our parameters. So currently, what we're really looking at is a bounce or rejection off of this level, which we were talking about in the previous video as a minimum level for a wave 4, which you can see in white here. Now, just to review very briefly, this white count, which is 1, hopefully you can see my cursor. I know a lot of you guys are on phones watching this. This is wave 1 right here. And then we had a wave 2 up here. And then the longest, most powerful wave in Elliott Wave is the wave 3. Now, I had moved my wave 3 in white from this low over to this low, and I explained that in my previous video, so I'm not going to explain it again here. What I was talking about is, even though this made a lower low, this is rather structureless, making me think B wave. This looks like an A wave. So now, actually, I didn't label those before because I wasn't entirely sure and I was staying open-minded. But because of this reaction off of the minimum level for where a wave 4 should terminate, anywhere in this box is reasonable for a wave 4 to terminate. So I'm going to label this A, B, C. Now, of course, price could come back up and still be in a wave 4. But given the reaction we had from that level, I'm okay with two things. One, shorting, and two, calling this the top of wave 4. And I'm willing to be wrong, because it's not up to me, it's up to price. I'm tracking things based on price. So for this, I like it as a 3-wave move, A, B, C. And this, you could get 5 waves out of this, 1, 2, 3, 4, 5, with no overlap. As you know, one of the tenets of Elliott Wave is that wave 4 should not get in the price territory of wave 1. And even if it does, it could just be considered a diagonal. So in any case, this measures well as an ABC. And then now look at this reaction. Very nice. Now, full disclosure, I had tinkered around with a long scalp in here. Could have taken the gains, but didn't. When it came back, I flipped short. And then I'm continuing to be short. Why? Because now let's continue to look at additional parameters for Elliott Wave. So if this really is the top of wave 4, wave 5, which is really wave 5 of this C wave, which, by the way, goes with this B wave top over here. So the yellow Fibonacci level down here at 2784 is derived from the measurement of the A and the B that goes with this C wave. So this is a larger degree measurement, okay? And this is the minimum fib level for a standard wave C. Can it extend deeper? Sure it can. And when it comes to a C wave, my charts are almost always going to have a C wave in yellow. And if it wants to extend deeper, those are the yellow fibs if it wants to extend deeper. Well, how am I going to know if it's likely to extend deeper. How in the world would I know that? Well, a couple of ways, but the primary way that you're going to know that, and it's actually my favorite thing to do, is look at the structure of price. So what I mean by that is, if this is a wave 5 that we're about to get, because wave 4 may have topped up here in this ABC structure, if we are about to get a wave 5, this should unfold in 5 waves, similar to how wave 3 in white is composed of 5 waves, which are these purple waves. One, see here in purple, 1, 2, 3, 4, with a nice 5-wave structure for wave 5. And that gives you this white wave 3. And then now we've come up to strike the parameters for not only where the minimum for wave 4 should be, but this other level of 29.61.5, which I had on here. It's kind of created a bit of a double top right in there, because this level is more of a supply demand level from the past that I dragged over, and sure enough, price is interacting with it. So structurally speaking, this should give us 5 down, followed by a wave 2 at some point, followed by a deep wave 3, a wave 4 bounce, and a final flush down. So I will adjust this target once I have what I think is a 1, 2 in place. I will be able to use the fib projection tool to come up with a more exacting target of where this bottom should be. And by the way, I can also be dead wrong, and wave 4 is not done, and somehow this comes back up and gets back up into this box. Or price can do anything it wants. It could come all the way back up and just plow through all this resistance, and the bottom is in. However, we were talking in the previous video about this being an area to expect resistance. And remember, I had 3 steps in the previous video. This is step 1. Get above this level with step 1. Well, it didn't even make it above step 1. It got rejected hard at step 1. And that's in part, even though I flirted with long scalp in here, I hardly took any heat on that. But when it came back down on this last time, I flipped short based on the price action on the much lower time frame. For the purposes of this video, I'm not going to get into that. So what are the parameters now? Well, guess what? The parameters are almost the same, except now they're in reverse. So again, this is a key level, 29.61.5. Bears do not want to see above that level. Okay. And the next meaningful level, the way I'm thinking about this to break, is basically this 200 fib, or more exactingly, 28.82. Below 28.82 unlocks the door to come down here at a minimum and see the 2618, which is derived from the overall 5-wave structure as measured by this white 1, 2, 3, 4. See, but in commodities, wave 5 can extend. And this is a C wave. So there's 2 different ways I'm thinking about this. The C wave itself has its own set of fibs, which are in yellow. So if it doesn't hold, and by the way, I'm assuming it's going to come down. I can be dead wrong. I want to be clear about that. I know sometimes when folks talk about Elliott wave, it's easy to slip into the verbiage as if you're talking about certainties. Actually, this is a very important point. We are not talking about certainties. We are using Elliott wave for its parameters. Okay, it's parameters over certainties. It's not about predictions, even though Elliott wave does have a predictive quality to it, for sure. Of course it does. But by focusing on the parameters and then focusing on your risk management, that is really the name of this game, is risk management. So if you have good parameters, then you have the ability to manage your risk and let it go. If you're wrong, you stop out, let it go. Wait for the next set of clear parameters. Okay, so let's hop back into the chart. So the parameters for me are 29.61 to the upside. You want to see it break 28.82. So this is no man's land. We're in the middle. So I would not initiate a trade here. I like to initiate a trade on any instrument at the extremes of my parameters, or at least price action as it's relating to a parameter. So in this case, price had all day long to try to get over this level and it failed. I mean, if I zoom in here, you'll see how many times it failed to get above that level. So the parameters to the downside are first 28.82. Then once we get into this box, I think that's a reasonable, just call that a parameter in itself, is getting in this box below the 618. Okay, so that's the second parameter. Now those are very close together, but let me put the 886 on here a little further down. And where is this whole structure? The 100 fib is giving you the entire structure that this thing is measured off of. I wish I could see that, but I can't because it's so blue. Let me see if I can brighten up this blue. Oh yeah, sorry, 2658. So 2658. If you lose 2784, that's my next parameter, okay? So parameters 2882 and then 2784. So keep these parameters in mind, but what I'm going to be doing is clocking the structure of the next meaningful retrace. Wherever this finally bottoms and gets a meaningful retrace and then rejection, I'm going to measure, which is going to allow me to project more exactly somewhere down in this level, because this can happen anywhere. It can come deeper, it could be more shallow, but the best next clue is going to be the structure that we see unfold from here. Okay. So don't get killed trying to long silver too early, and don't get discouraged if this thing really comes down deeper somewhere into these yellow fibs, because it could certainly come down as deep as it wants. There's plenty of room for this thing to extend if it wants to. So I'm just making this yellow to remind myself when I look at my chart that this is possible anywhere from up here all the way down. Now, I know what you're thinking, man, that's too crazy wide of an area. So be patient. Be patient, because I will be updating this as structure unfolds. So look, if you're getting value out of these free videos, I encourage you to subscribe. So anytime I update on silver, NASDAQ, Bitcoin, gold, the SPX, but my favorite, crude oil, you'll be sure to get the updates. Don't just use the parameters. Understand what you're looking at in the Elliott wave chart. So hopefully I'm teaching you something as you look. If you're new and you don't understand much about Elliott wave, my intention here is to share with you what I know so you can develop your own parameters. So by subscribing, you're going to make sure you get the updates on these instruments that I cover. And I sure do appreciate it. So also, if you're looking for support and help with your trading psychology, if you've ever let winners turn into losers a little too often, if you've had your account go wildly up and then wildly down in the red, maybe you've blown up an account, or maybe you've blown up 2 or more accounts. If you're looking for help, I cannot recommend more highly The Professor Trades. It's scrolling across the bottom of this video, and I put a link in the description of this video. For less than $1 a day, you can join a club with mostly scalper day traders led by Armando, who is a master scalper, master day trader. His gift is his ability to teach and convey his amazing mindset, convey to others and teach others how to adopt his mindset. Size it down, put the stops where they should be, allow price to breathe. Don't just give all of your gains back by stopping out. You got to know where the stops are. And then I'm combining my Elliott wave into his room, so you have even more parameters for longer trades, for swing trades. Let's say you do Armando's method to create a scalp and grab quick gains, but then you want to leave one on for potential larger target to get more of a swing trade. And that's where Elliott wave really shines. So come join us in the room. I can't recommend it highly enough. The link is in the description. All right. Thanks a lot for watching. Give me a like if you find value in this video to encourage me to keep making them. And I hope to see you in Armando's room. All right. Take care. Thanks for watching. Bye-bye.